Hey everybody, Smart Silver Stacker here. Hope you're doing well. Over the course of the next 24 to 48 hours, there is a risk of a sell-off, a correction, possibly even a crash in the price of gold and silver. I'll explain to you why that is the case and how you can potentially insulate yourself from this, maybe even turn it to your advantage. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers get gold or silver at spot by visiting sdbullion.com/new. All right, so a brief review of what's been happening with the gold and the silver price recently. Yesterday, silver had a record 14-year high close at $42.68. Earlier today, the silver price put in a new intraday 14-year high of $42.96. So the metals have been moving higher at a rapid pace over the course of the past several weeks. With gold, it's a similar story. Today, the gold spot price rose as high as $37.03. That's the first time in history that the gold price, the spot price, has risen above $3,700. Now, the miners have also been on a real rip, but today we're starting to see a bit of a correction here in the miners. This is the SILJ Junior Silver Miner ETF right now down about 2.83%, and we've got the GDX today also in the red here at 2.3% in the red for the day. Now, the reason that I suspect we may be about to see a bit more of a correction in gold and silver and also its derivatives, the miners, is that tomorrow is the much awaited Fed day when we're going to get the Federal Reserve's FOMC rate cut decision. That decision is going to be delivered at 2 p.m. Right now, according to the CME FedWatch tool here, markets are anticipating a 96.1% chance of a 25 basis point rate cut, and then only a 3.9% chance of a bigger rate cut at 50 basis points. Now, I will say right off the bat, if we do get a 50 basis point rate cut, a surprise one, the metals are not going to sell off. At least I do not anticipate that that would be the case. But if we get the more likely event, the more probable event of the 25 basis point rate cut, we may very well see a buy the rumor, sell the fact, or a buy the rumor, sell the news kind of event. So right now, markets are already pricing in that rate cut. That's part of why we have seen the metals rallying the way that we have ever since the Jackson Hole speech, where Fed Chairman Jerome Powell basically telegraphed that September would be the month that we would begin to see Federal Reserve easing of monetary policy in the form of cuts to the federal funds rate. The way these events work is you see the bid up in the price of the assets leading up to the actual event, but then when the event plays out, there is often a correction in those assets. As we are headed towards this easing of monetary policy, it's a perfect setup here for the metals to have a correction. Also, looking at the charts here, the daily charts of silver, you notice that the RSI, that's an oscillator, is over 70. Now, this is an indication, this particular indicator, when it goes over 70, that an asset is getting a bit hot, it's getting a bit overbought, and it may be due for a correction. So that seems to confirm the fact that we are ripe for a sell-off here. Gold, it's the same story. The RSI very elevated here, remaining very elevated around 78. The SILJ, we had the RSI getting over 80, so getting very overheated, and the GDX also remaining over 70 today, even with this sell-off that we're seeing right now. So it's very possible that we may see these assets have a sell-off tomorrow and maybe throughout the rest of the week. However, I do believe it will be short-lived. As the Federal Reserve begins to ease here, there's a good reason that gold and silver and other assets were being bid up in anticipation of that. The Fed is getting ready to cut at a time when inflation is already elevated, when the M2 money supply is already at record highs, when the markets are near record highs, when the miners, the gold miners, are up like 100% year to date. So there's already a lot of inflation out there, a lot of asset price inflation, and a return to an easier monetary policy is only going to accelerate that. Now, I talked about how you could take advantage of a potential sell-off. Well, in my mind, even if we get a sell-off, the bull market in silver, in gold, in all of the miners, in physical bullion, it's still going to remain intact. This is not going to end the bull run. It's not going to negate it. In fact, a return to easy monetary policy will likely foreshadow a much bigger bull run, which is ahead. but we do have that buy the rumor, sell the fact dynamic in effect here. So one way you could take advantage of it is to increase your position in physical bullion. And of course, none of this is financial advice. I'm just kind of giving you my thoughts. You can buy the dip, which is what you want to do in a bull market. You also might, in anticipation of this, if you're a trader, you might buy some short-term puts. Now, if you don't know about options, just stay away from those would be my recommendation, because you can certainly lose a lot of money quickly trading options. But if you want some kind of an asymmetrical bet here, you're already long perhaps in the form of physical bullion, in the form of owning the mining equities, then some short-term puts, some downside protection on something like the SLV ETF or the GLD ETF or the GDX or the SILJ, wherever you can find a liquid options market that's tied to gold and silver, might be a decent way to get yourself some protection ahead of this event. But look, the best way I think is just going to be to take advantage of any dips and add to physical positions, maybe add to those long positions in the derivatives as well, like the miners. If that's something you're into, it's something I do. And certainly the miners have performed very well thus far this year. So if you've been watching that and lamenting it, thinking, oh, the GDX has taken out record all-time highs, well, you may get an opportunity to buy in at lower levels. I think from this chart, what we may see from a technical standpoint, again, this is the GDX, is this green line represents record all-time highs dating back to the 2011 bull market. We've surpassed that level recently. What we might see is like a retest and then a bounce. Now, of course, these types of forecasts, nobody has a crystal ball. If I knew exactly what was going to happen, I wouldn't be making YouTube videos, right? I'd be a billionaire. But this would not be an unexpected event after you take out something like a record all-time high to see a retest and then a rally, because what was once resistance will become support. That's what happens in bull markets. It's kind of a similar story in the SILJ. This white line here represents the top part of a long-term consolidation pattern, which the SILJ recently broke out from. So we might see a similar dynamic there. We might see a decline back to that level and then a bounce. That would be a pretty normal thing to see after you see, finally the event take place, which has been anticipated. You get that buy the rumor, sell the fact, you get profit taking on the actual event itself. And then that charges the market back up. It'll get the RSI, the oscillators, back into a normal range, and the market will be ready to resume the uptrend. This is how the bull market in gold and silver has been progressing over time. You can see there are these dips along the way, and I have been buying them all the way. If you've been watching the channel, perhaps you have been too. And I think that if we do get a sell-off tomorrow, which is probable, it will be another one of those dips to take advantage of. But leave me a comment down below to let me know what you think about the potential for a crash in the price of gold and silver tomorrow. How would you play it? Remember, none of this is financial advice, so do your own due diligence, make your own decisions. But thanks for watching, everybody. Don't forget to like, comment, and subscribe, and I will catch you next time. Smart Silver Stacker out.